It is 7 o'clock, so now I can actually start. And I'm going to start by introducing myself. So you can see up here that I am a Senior Vice President at the Federal Reserve Bank of Minneapolis. What it doesn't tell you is I've been with the bank for 31 years. And during all of that time, the payment system has changed a lot. But I have had some part of my work involved in payments throughout that period. So part of what you're going to hear is a little bit of history, but I think that history can be very helpful in understanding why we are where we are with the payment system and what we might envision coming in the future. So, and right now, I continue to have responsibility for various aspects of payments, including emerging payment topics, which digital currency would fit into, things related to standards. A lot of you don't think about the fact that when you use your card, the reason you can use it around the world is because there are technical standards underlying that type of payment instrument that allows you to do that. So I'm involved in that in terms of national and international standards. And also I do a lot of outreach, mainly to businesses as an important end user of the payment system in the US and around the world. So here's what I'm planning to talk about. I'm going to start by letting you know what I view as the payment system. Distinct from a payment instrument or a payment method, there's actually sort of an ecosystem around payments. So I want to bring that to your attention. Then because this is a discussion with the Federal Reserve, I want to tell you a little bit about the Federal Reserve's history and role in payments, which actually is pretty different than most central banks around the world. What we do in payments is not typical. So I want to tell you a little bit about that. And then certainly where we may see ourselves, not the Fed specifically, but the payment system going in the future. And along the way, I'll certainly talk about certain payment methods. So if you have a number of questions about digital currency, we can talk about that. If you have questions about fraud, we could talk about that. So there are opportunities to sort of get into some of these other areas. What I would invite you to do is just raise your hand if you have a question. I'll stop, I'll take it, deal with it. And again, if it's something that only one of you has a keen interest in, we'll plan to deal with that offline after the session. Does that seem reasonable? All right. So again, I think it's important when I talk about payments to remind all of us that there's this broad system around that's required for any one of us to use a card or a check or cash or whatever we do to make and receive a payment. So they're clearly users, end users. All of you are consumers. Some of you may also be engaged in using payments as businesses. Networks have become extremely important. If you think about the billions of payment transactions a card network facilitates in a very speedy fashion, that's a critical part of the payment system. Laws and regulations. Many of you may not even be fully aware of, frankly, how well protected the US consumer is with respect to our use of payments. We can do some, frankly, sort of silly, stupid things, and we still are not on the hook in terms of if a payment goes awry or there is fraud associated with the payment. So the laws and regulations are really important in terms of how they may protect us. You know, obviously, financial institutions are very important, and other service providers. Some of you might use PayPal for payments, or maybe you use your Apple phone, you know, Apple Pay. And in a situation like that, both the service provider, PayPal, Apple, they're important, but there's a financial institution in both of those examples behind the scenes making sure those payments work. So it's the system of actors, and they all need to work together effectively for those of us in the room to be able to trust that our payment will be executed in the fashion that we expect. So I think about the payment process, the end-to-end process, as having sort of three distinct parts. There's the set of instructions that begins at the front end. So For example, I might use my card at a retailer where I'm saying you can, debit my bank account if it's a debit card, or you can send a debit to my credit card, or I might be writing out a check, or I might be a business. In any case, there's a set of instructions that begins the process that the end user initiates. Then there's this process in the middle, and this is where the Federal Reserve has largely been involved. This is where if you use your debit card at a grocery store and it's associated with Bank X, and the grocery store wants to collect that money from your bank account and they're associated with Bank Y, there has to be a clearing process, an accounting process between those two banks, so the debtor and the creditor are each made whole per your instructions. So that's this clearing and settlement process, and that's where the Federal Reserve is very actively involved, and I'll talk about that a little bit more. And then at the end of the day, whether it's you as a consumer through maybe your online banking, or maybe you do it by hand like my mother does, or you're a business, you want to be able to account for that payment. And it's interesting with consumers, this is kind of sad, I think. So think about what category you're in. There are some consumers that account for every single payment. In the olden days, they get out that check ledger, or today, maybe every day you check your bank account, but you want to know to the penny that everything is accounted for. About a third of you are in that group. Then there are about a third of people who never look at their bank account, never check their statement, just sort of believe the world is good and all will be fine. And somebody is taking care of them. That's about a third. Yeah, really, a third. And then there's a third that, this is sort of guess what group I'm in? So then my husband is in the other group, which he's just sort of ballparks it. Well, if I'm within a couple of bucks, give or take, that's good enough. About a third of consumers are in that group. So I highly recommend the first group for all of you, especially in this day and age. Yes?
Will you be talking about the timeline of this end-to-end kind of process and how it's maybe potentially getting faster to like real time?
Yes, I will be.
Clearing?
And actually that's a really good point, because this end-to-end process depends a lot. There are examples today. If I use cash, boom, it happens right away. It's instant, it's immediate, right? If I'm a business paying another business, it can be days, especially in order to get the information I need to reconcile. And if I'm doing an international payment, wow, even longer. Any of you who've tried to either make a payment to another country or receive cross-border, that's an even longer process. But we will talk about that in terms of faster. So here are the payment types that are in place in the US today. So ACH, everybody has direct deposit, or you get your Social Security in a direct deposit form. My mom calls those auto payments. They're actually called the ACH. And those can be credits and debits. And it's a batch system. Basically right now, it's next day, but that's changing to same day in this year, actually, starting this year. A cash, of course, how many of you carry currency typically? Yeah. Now cash is in terms of volume, it's still the #1 form of payment in the United States. So even though we talk about electronic payments and everybody's going electronic, cash is still king in terms of volume. And that's because if you look at a payment that's like about under $25 and payments that are under $10, they're virtually 90% cash-based. I know some of you love using your cards because of the points, but you're not in the majority. Yes, sir?
By volume, do you mean number of transactions?
Yes, frequency
Okay.
of transactions, not value.
Okay.
Not value. So frequency of transactions. Check, how many of you still write, say, 1 check a month? That's pretty good. Never in a line at a store, right? Otherwise you get the stink eye. Seriously. So yeah, what is it mostly for? To pay a bill? Yeah, that's the #1 use today of a paper check, is for consumers and businesses to pay bills. And it's especially still dominant among small to medium-sized businesses. They may have 90% of their payments made and payments received still in check form. So as much as we talk about electronics, and it's true that checks are declining, they still play a very significant role in our payment system. Credit cards, debit cards, how many of you prefer debit versus credit? Debit? Credit. Yeah? So this mix is not typical in the United States. In the US, we now see more debit transactions than credit transactions. And that's clearly been a trend, consumers preferring not to get into debt, so to speak, using their debit card as essentially a cash management tool. But there are those who like that, 30-day and pay it off regularly. What's really disappeared is there used to be this notion of the credit card as revolving credit, and that's really pretty much gone away. So credit card is used in some cases because you really are living paycheck to paycheck, but the majority of people using credit cards are just paying it off. And so otherwise people are preferring the debit version. A stored value card, you've all received a gift card? Yes.
As I understand it, there's a $50 limit on a fraudulent transaction on a credit card, but the debit card doesn't have those limits. Is that?
Actually, it's the reverse. And that's a good question. So it depends. On a debit card under Reg E, if you as a consumer don't report it in a particular time period, like, you notice it, you report it, you can be assessed $50, and if you don't report it in even a longer time period, you can potentially be on hook for the entire fraud. So there are really specific rules about that, and if you're interested, we have a liability matrix that we put together that lays out all those details. Now, what's happened with both the credit and the debit card is if it's Visa, MasterCard, American Express branded, most of the brands have provided what they call a zero liability policy. That is not in the law or the regulation, but the brand has decided to extend a zero liability policy to anybody who's using their branded credit card or debit card. So it often depends also on the brand. Now, if it's a bank issued debit card, and let's say it's not co-branded with MasterCard Visa, then the bank can choose to say you're on hook for that $50, or in many cases what banks will do is because of that zero liability policy that's pretty prevalent in the market, they'll waive that fee. But they could choose to assess that $50, or as I said, depending on how long you wait to report a fraud, like let's say you figure it out 6 months later, you could be on the hook for significantly more, at least as the regulation lays it out. But it really tends to be between the bank and the customer. Does that answer that question?
I think so. I have to take a look at it again.
Yes, it's confusing. Yes, sir.
Just as a follow-up, isn't there greater liability if someone has direct access to someone's bank account?
Yeah, so that's a different liability question, and you're right. If I have my credentials stolen, right? So someone steals my credit card account number and maybe some other information like my zip code if that's important. They only have the ability to use that credit card, and if it's caught, the fraud stops. So the issue is, let's say my debit card credential account number is stolen. That's really an alias for my demand deposit account, right? That's connected to my demand deposit account. So some consumers are concerned, and legitimately so, that now you have potential access to all of the funds in my bank account. So that's not so much the question about if a fraud is committed, how much of the fraud am I liable for? But that's sort of a broader question of what other access can they get. Yeah, so that's, I think, a legitimate concern. And that's why some people will say, if I'm going to use a card internationally, or if I'm going to use something where I think I might be more at risk, then I'm going to use my credit card because I think I have more protection. And I think that's a fair conclusion. All right. We talked about stored value, gift card, et cetera. And this takes the form of both, where you might, as a gift, give somebody a stored value card where it's a one-time use. And in another case, you might have a reloadable. So like maybe you have a Starbucks card and you can reload it. So it's really a stored value account and the card is just the mechanism that you're using. Or maybe it's a cell phone and you're storing value in that form. A wire transfer is a little bit different than an ACH, and the way most consumers see this is probably something like a Western Union. But the way that we think about wire transfer are these tend to be, like let's say you buy a new home and you pay the mortgage off in the process. And often in a case like that, to close a fairly large deal like a home purchase, a wire transfer is sent because it has a couple of really important features. One is it cannot be revoked. Once that wire transfer is sent and received, it's irrevocable. So it has a finality associated with it that's not true of any of these other payment types except cash. The other thing that happens with a wire transfer is its immediate settlement. So all of these other payment methods settle, again, except for cash, typically in a day or so. A wire transfer, as soon as it goes between the bank accounts, which happens is almost instantaneously, those funds are settled. So it's not revocable and it's final, which is why it's used for large value transactions. So now let's talk about digital currency for a minute. So digital currency, or e-money, has really been around actually for a long time. There have been manifestations going back to the 1980s. But what's happened recently is there have been these new schemes that are, I would call them cryptocurrency or maybe algorithmic currencies because they're derived through mathematical processes in many cases. And they're often associated with a technology called a distributed ledger. And that distributed ledger is a permanent record of all of the transactions associated with the issuing of that particular digital currency. Now, Bitcoin is the most prevalent of these currencies. There are actually, I don't know, Dan, I think over 700 digital currencies of this type that have emerged in really just the last few years. Bitcoin by far and away dominates in terms of market capitalization. It's by far and away the largest and most widely used. But keep in mind, this has happened in the last 5 years. So I, for one, would not be prepared to go on record and say, this is going to be around forever. I think it's just too soon to tell. I think it's a really interesting technology. I think there's lots to pay attention to. But I just don't think we know yet whether, like cash and check and these other sorts of things, this type of digital currency is going to be around for the duration. We'll just have to see. So quickly on volume and value, and again, this doesn't show funds transfers or wires, so keep that in mind. That would swamp on the value side. But you can see over on the volume side how cards are now over half. Again, if I had cash in here, cash would dominate. Yes, sir.
Sorry to jump in, but I was curious about something you just talked about.
Sure.
In looking at Bitcoin and other cryptocurrencies, they're inherently designed to be controllable, basically.
Correct.
Regulatory.
Correct.
Is there a sort of like a working group or a thought on how the Fed and other central banks are going to handle the emergence of currencies that are non-regulatory?
Yeah, so there's actually a lot of work. There are papers, academics have written papers on this very question. The Federal Reserve has informal groups within the Federal Reserve looking at that kind of a question. There's the various central banks. The UK, for example, has a defined set of research on that set of questions. So there is a lot of, I would say, very preliminary thinking about that question. Now, the other thing about this ledger concept is you could take the very same principles and you could have a centralized ledger. You could take the very same technology and you could place it right within the US banking system and manage it in a centralized fashion. So you're exactly right. The scheme behind Bitcoin is a decentralized process where there are all these computers around the world, mining for Bitcoin. That's one application of the technology. But you could apply the same technology with a trusted intermediary, a banking system, a central bank, using many of the same principles and concepts. And I've talked to information security people who have said, for example, they're very critical of the security protocols around Bitcoin. And so there are lots of people who have said, and technologists who have said, that was a scheme and a process that was developed very quickly, and lots of developers have added to it. There are many, many ways in which it probably could be improved. So I think we're just very much in the early stages. But yeah, good question. Yes, sir.
Do you hear of any concern from the Treasury Department? Under the Constitution, the federal government is the only government allowed to issue money, and they have gone after some of the gold-backed currencies that were cryptocurrencies, if you want to call it that, or some of the digital things backed by gold. Is Bitcoin even have a touch base in the United States and a site?
I
Or
am
would
not
they be
aware of the
in trouble?
Treasury taking any official positions. Now, keep in mind, currency can be defined in a variety of ways. So you're absolutely right that with respect to the issuance of fiat currency, only a central government can do that. People who are issuing Bitcoin would say, this isn't backed by the U.S., the full faith of the U.S. government. The value of this is traded like a stock. So it's really not currency in the way that you and I would define currency. So all of those things are the kinds of issues and questions I think that are being explored. I think one of the reasons why people are attracted to this is because they view it as somehow outside of kind of that central system. But to the point that you're raising, it's really not traditional currency in the way that a federal government would back a fiat currency. Yes, sir.
I'm thinking you're probably going to get to this, but when you're talking about trying to improve the U.S. payment system,
Yes.
is one thing you're looking at, or the Fed looks at, is the transaction costs for any of these different
Absolutely.
types. So in that vein, I'm just kind of curious if there's an analysis has been done to see which of these ultimately have the lowest transaction costs. Can you speak to that?
Yeah, so there has been some work looking at the cost of a decentralized digital currency, and actually the costs are very high. A lot of the costs are associated with the computing required, and so this is not a cost-effective method as compared to, for example, cash today. Cost to who? Cost to the system. So the way that we think about cost is social cost, right? So I'll give you an example. Credit card. The cost to you may be very little as a consumer. Maybe you pay an annual fee. That's it. If you pay that credit card off. But the cost to the system, merchants, for example, that pay high network and interchange fees, organizations that pay for the points that some of you enjoy, those costs are really high. The fraud costs associated, which generally speaking consumers don't pay for. So the way the Fed looks at the cost of a payment method is those aggregate societal costs. So from that perspective, cash and ACH are among the cheapest on this list. Cards are relatively expensive for the reasons that I talked about, because all of the programs and points and so on associated with them. Wire transfer is relatively expensive because of the risk associated, because it's final, immediate, irrevocable. So there's huge and required costs associated with maintaining that kind of a payment system. And this type of currency, still very early days, but at least the initial work that's been done suggests that the cost, the societal costs, are pretty high. And that for something like this to go forward, you would really probably need a different architecture and something that's more centralized. Because the thing about payments is there tend to be a lot of them. So the way you get a low-cost system is typically scale. And that's the way you drive costs down of these systems. So does that answer the question that you asked? Okay, great. So we talked about this. Let me talk a little bit about the Fed. So as I said at the beginning, the Federal Reserve is a little bit different than many central banks around the world in that when Congress wrote the Federal Reserve Act and formed the Federal Reserve in 1913, it put payments and payment processing into our organization. So at that time, there was not a standard nationwide check collection system, right? Think of how we benefit from that today. You can write a check here, it clears, everything works really well. And it also wasn't a par system, right? So today, if you receive a check for $100 and you deposit it at your bank and you ask for the money, you get $100. They don't deduct a fee. So when in 1913, none of that existed. It wasn't a par system. You know, banks would assess fees. It wasn't a uniform nationwide clearing system. And Congress thought, that's not a good thing. We need to fix that. And so we're going to make that part of the role of the Federal Reserve Bank to accept check deposits for clearing. They also wanted the Fed to be involved in issuing a uniform currency and to ensure that the public had access to currency through the financial system. So they put that in the act and made that part of what we did. And so then over time, because we had this sort of initial foundational work in payments, we have, for a variety of reasons, ended up being involved in a couple of other payment systems, and I'll talk about that in a minute. The other thing that Congress did when we were formed is they said the Treasury Secretary may use the Federal Reserve banks as fiscal agents to the US government. And so that means if the Treasury needs our services to help the Treasury function in an efficient manner, help it collect its debt, for example, or service savings bonds, they can ask the Federal Reserve to do that. And in fact, our single largest customer in terms of our financial services is the US Treasury. So those are embedded in the Federal Reserve Act, and that's why we have a role in payments that you might not see in other countries in central banks. The other thing that we do, and this is really the board in Washington, not the Federal Reserve banks, is there are certain regulations related to payments that Congress has assigned to the Federal Reserve. And this has changed over time. We used to, for example, play a much heavier role in card-related or electronic payment-related regulations like Reg E and consumer protection regulations, but those have been moved to other agencies. So you'll see here Reg CC having to do mainly with check and how quickly funds are to be made available. Reg II is really the most recent area of regulations assigned by Congress in 2010, having to do with capping the price of the interchange fee that is charged for debit card transactions. And that really involves the issuing bank and the merchant or organization that's accepting the debit card. And then there's something called Reg J, which is kind of getting into the weeds. But so we have some assignment in the area of payment regulations. So let me talk a little bit about our history. And as I said, at the very beginning, Congress saw fit to put us in the check clearing business, frankly, to improve the US payment system. They wanted us to improve efficiency because they viewed the current state of affairs in the early 1900s as a market failure. And in particular, they wanted for end users to be able to get the full value of the funds represented by the check, so they wanted us to implement a par system. And think about, checks over 100 years ago. they weren't used in the way that they're used today by consumers. They were really considered a wholesale payment, not entirely, but mostly. So business to business, bank to bank. And as I'll mention, this role that we have, which Congress designated, has also changed over time per Congress's preferences and to some extent the industry's preferences. So here's where we were. And you may or may not recall that the wireless telegraph or the wireless system started emerging in the late 1800s, early 1900s. So shortly after the Federal Reserve was established, we started trying to find more efficient ways to move money and began to introduce electronic methods. And we began to develop what was a proprietary telecommunication systems to move large value money transfers, which is now what we call our wire or funds transfer system today. So that started early on. In the 1970s, the banking industry was really looking for ways to improve on the paper check as the primary method for smaller payments, smaller value payments. And so they came up with this idea of what was called the automated check clearinghouse. And rather than deciding that the banking industry alone would establish this, because the Federal Reserve had a broad network, they asked the Federal Reserve to work with the banking industry to be the operator for these payments. So that was an example of where the industry was really looking for the Federal Reserve to play an operational role. And then an interesting thing happened in 1980, and I'll talk about this in a little bit more detail. It was called the Monetary Control Act. And again, I use this as an example of how, laws and regulations, I said early on, are an important part of the payment system, and these are just illustrations of that point. So up until 1980, so between 1913 and 1980, the Federal Reserve gave away all of its payment services for free. But it would only give its payment services to member banks. And as a percentage of the total banks in the country, not a lot of them are members of the Federal Reserve. It's really a minority of banks that are Federal Reserve members. So we were providing these services for free, but we were providing them to a relatively small set of financial institution members. So Congress came along and it said, some of these services that you're providing, like check, it's the same thing that Wells Fargo provides or some other bank provides. So you're competing with the private sector and you're not competing on even terms. They have, taxes and they have to get a profit and you're just giving this stuff away for free and that's costing the taxpayer money, true. And we don't think that's a good idea. So we're going to change the rules. We're going to say this. We're going to say you can offer your services to any financial institution, member or not, but you have to recover all of the costs of those services just like a private sector competitor. And so that means you have to come up with a pro forma income statement that includes imputed taxes, an imputed profit, all of the same sorts of things that a private sector company would have to do. And so this was a huge change. We laid off thousands of people. We completely changed our business model because we had to in order to be as efficient as a private sector competitor. And we do this today as well. So since 1980, if you look back at all of those years and you look at our cost recovery, which we publish every year, we're at about 100% cost recovery, including these imputed costs for all of our services. Here's another example of an important change. So in the 1990s, there were all these, computers and electronics and so on and so forth. And we had the technology available to do what we're doing today, which is if you deposit a check or if you receive a check and deposit it, it is all managed through image clearing now, digital clearing, right? So you get a bank statement, maybe, and you see little images of checks. So you don't get that packet of paper checks anymore on a monthly basis. Now, we could have done that as an industry in the late 1980s, 1990s. The technology was available. But there was something called float. And float can be your friend. You were talking about costs, right? So there were huge costs in the check clearing system because if I am a West Coast bank and the only way I can collect from an East Coast bank is by law, I have to present the piece of paper to you, and I have to fly that across the country, and then only do I get my money from you. There's a lot of float in a system like that. And so the paying bank didn't want to be able to recognize the electronic equivalent because they made a lot more money if you had to deliver a paper check to collect those funds. So the banking industry was, frankly, opposed to using the technology available. So what happens? Well, we had the 9/11 attack. And you recall, airplanes were grounded, right? Guess what? There were millions of checks in those airplanes that were grounded, sitting on the tarmac, unable to be collected. So the Federal Reserve actually stepped in and made a policy decision and said, we will give credit to all of those financial institutions waiting for these funds that are stuck in these airplanes in order to keep the financial system in good shape. But Congress realized what a fundamental vulnerability that was. And they said, okay, we're done with this in industry. We don't care about how you make profit on float. We are now going to enact an act that says the collecting bank can send to the paying bank an electronic image of that check, and that can substitute for physical presentment of that check. So this completely changed the environment. So here's 2004, right? Here's electronic digital checks. Now, checks are going down as an absolute matter. That's why you see this line going down. But here's paper volume. It's essentially gone. Yes, sir.
Hi again. I'm very curious about, global surveillance and everything. And when I see things like forcing every single check image to be digitized and being aware that, the NSA and their 5 main partners around the world are looking at financial transactions, I'm curious to hear what kind of cryptographic standards the Fed uses to protect people's money.
Well, so in the case of reporting information, that's all subject to what are called money laundering rules that are essentially imposed by FinCEN. And what I would say about that is they use certain thresholds, like essentially $10,000 and above. So the only reporting that financial institutions are required to do as it relates to the surveillance that you're talking about is if it hits that threshold, and then there are specific reports that they are required to complete. So in those cases, they don't actually turn over the digitized check, but they turn over what's called a suspicious activity report that provides specific information to law enforcement.
What about just the fact that we know that, if I'm doing something suspicious with $10,000 and there's a reason for me to be suspected
Right.
of doing something, that's fair for them to hand over.
Absolutely.
But what about the uptake collection that's being done without the consent of the banks, and I'm guessing the Federal Reserve too? Is there any kind of cryptographic or encryption standards?
Well, we impose encryption standards on anything in our databases. I cannot speak to the financial institution in general. They are required to apply what are called FFIEC guidance. So all of the regulators have in place a wide variety of data security regulations, both for data at rest, which can be an issue, as well as data that's transacting. And so there are encryption requirements and other sorts of security requirements intended to protect consumer data, and that's certainly true for the Federal Reserve. That doesn't mean that you can't have a hack, which is a separate issue. But in terms of, and the Federal Reserve, by the way, has never been hacked as it relates to our payment systems. But yes, you are absolutely right. There are standards that must be applied and part of the regulatory process in terms of bank regulators going out to banks is to ensure that they're complying with those. Yes, sir.
And the individual responsible for those standards, it's guidance provided by the FE.
FFIEC. So that there are agencies like the FDIC, the OCC, the Federal Reserve, the agency that supervises credit unions. They collectively work together on regulations in the area of data security so that every agency offering supervision isn't doing something else. So the group that they work collectively is called the FFIEC. And they have a website, and there's lots of information out there. So yeah, so what this is trying to show you is how efficient, again, we were talking about costs, the check collection system has become because of digitization. So just to give you an example from the point of the Federal Reserve, when I came to the Federal Reserve, we had a check operation here. And I, in fact, was the vice president in charge of the check department back in the 2000s. And when I was in charge, we probably received every day 3.5 million paper checks into our organization. And overnight, we had to run those all across our computers and figure out what banks they needed to be sent to collect. And we sent them out, on couriers, et cetera, et cetera. We probably had about 350 people involved in that operation. We had 45 operations around the country doing that. We now have one. We used to have thousands of employees. The single largest employee group in this bank used to be people in our check department. We now have nobody in this bank that does anything to do with checks. We used to probably spend, and again, these wouldn't be public funds because remember we cost recover in our payment services. Nonetheless, we probably took out on an annual basis, just us, $100 million in transportation costs alone to fly those checks around and to stick them in trucks. So this sort of a change, which required a change in the law, but then required a lot of industry changes following, can have real benefits both for the consumer in terms of improving aspects of your experience, but huge cost takeouts in terms of social benefits. Dodd-Frank, the reason I mention this is it's certainly something that a lot of people have heard about. It made big changes for the Federal Reserve. First of all, consumer financial protections were all moved from various agencies to the CFPB. So we used to have responsibilities for Reg E in terms of consumer protection. That was moved to the CFPB. The other thing that Dodd-Frank did in terms of the Fed was this was the broad act in which Congress decided the Fed should set interchange fees for debit cards only. Now, there are interchange fees associated with credit cards, prepaid cards, other kinds of payment systems, but Congress wanted us to set them specifically for debit cards where the financial institution, the issuer, had assets over $10 billion. And so we did, in fact, do that. Probably prior to Dodd-Frank and this regulation, interchange fees were maybe on average about 50 cents, 45 cents a transaction. And this imposed a structure of about 21 cents plus a penny for fraud prevention and then another pro rata fee. So closer to about 23, 24 cents. Yes, sir.
I noticed recently I was in California buying gas and
Yes.
using debit card. I have to agree to a 35-cent additional before I can even sign
Yes.
off on it. It's kind of interesting.
Yes,
Whereas
that
down
is
here,
interesting.
no. Sorry.
Yeah, so that was for the use of a debit card. Yeah, and I think certain states in particular categories where they're saying, like using it at a pump, you need to affirmatively agree. Absolutely. The consumer has to opt in. For a higher, yeah, exactly right. And in some cases, they also will let you know that, especially when you use it at a gas pump, they'll put a hold on your card for more than the actual amount because they don't know what the actual amount is going to be at the point of authorizing the payment. So they might also ask you to affirmatively agree to that hold. Yes, sir.
Thank you. That's something that I'd not heard about before. Just kind of curious upon the entire transaction, having lived in Minnesota for majorities. And so how does that work otherwise? Does it not? Do we not have that interchange fee with the credit card? Were you to use that then, or?
You mean putting the hold on your
No,
card?
having to affirmatively say,
Oh.
here's an extra 35 cents.
As long as they're conforming with the law, which is a cap of like 22, 23, 24 cents, they wouldn't need to ask you because they're not asking you for something in addition.
Thank you.
You bet. All right, so current role, this has been our mission for a very long time. Integrity, you asked about securing data. We want the payment system to be as efficient as possible, and we want it to be broadly accessible. Nobody should be disenfranchised. Everybody should have reasonable access to the payment system so they can conduct whatever business they need to conduct. So I've talked a little bit mainly about this, what we do as a service provider. I've also talked a little bit about fiscal agent. And what I want to talk about now when we talk about things like faster payments is that the Federal Reserve also tries to work with the industry, with consumers, with the public on improving the payment system. And because it's a system, like I said at the beginning, we can't do that alone. We can only do that collaboratively. So here again is our world. I told you again that mainly we clear and settle funds between banks, between financial institutions. And these are the specific services we offer. You see the funds, the securities, ACH, check. Here's our daily volume. Here's our average daily value. So we're clearing really large sums of money on a daily basis. In the interbank market, we clear about half of the payments in each of these categories in the interbank clearing and settlement market. And our network could be, I don't know for sure, the Chinese may have a network that carries more value, but my guess is we're either the first or the second in terms of the value that we carry over our network. So it's considered a very critical network, and so we spend a lot of time making sure it operates well and operates securely. In terms of what we're working on going forward, we wrote a paper, and here's the, if you want to read the whole paper, it's, the body of the paper is maybe 25 pages, and then it has a number of appendices. But it's called Strategies for Improving the U.S. Payment System. And it's really the Federal Reserve, after doing a lot of listening and talking to a lot of groups, where we think, if we were going to design the best payment system in the universe, where we think the U.S. could improve. And so we think we could do a better job as a society engaging all of the stakeholders in figuring out how to improve the payment system. We think our payment system could be faster. It's certainly faster in a lot of other countries. And if we're going to make it faster, it ought to be safer. We think that could be done. We also think it could be more efficient, especially in international payments. And on the domestic side, where we see the greatest friction is in business-to-business payments. And then there are certain things, not so much that would be relevant to folks here, but for financial institutions, services that we could provide to help them achieve those outcomes. So if you're interested in more detail, it's certainly a paper that's available. So in order to work on faster and on safer, we did put together a couple of fairly large task forces. The Faster Task Force is about 300 organizations, and the Secure Payments Task Force is about 200, and really trying to get input from all stakeholders to figure out how we can speed up payments in this country and also make them safer. This is just some criteria to give you a sense of what we're looking at when we're designing a faster payment system. So there are examples today of closed loop fast payment systems, but they're closed loop. Not everybody can access them, right? So for us, if you're really going to meet society's needs, it better be something that anybody or pretty much anybody and everybody can access. what does fast mean? Well, you can clear something fast, but does that mean you have funds available to spend? So what are the aspects of fast that are really important? How do we want to have the payment system governed? Is it governed by an exclusive group? How inclusive do we want it to be? And then what if something goes wrong? How do we address those problems? So in designing this faster payment system with this task force, we've really tried to think about the criteria that we would want to apply. And then what we're doing right now, and I'm going to show you in a moment an example, we have been asking the private sector to show us some of their ideas, some of their capabilities, and we have requested proposals from the private sector for faster solutions, and we've actually received over 20 proposals that are now going through a vetting process. So I think at this point I'm going to show a couple-minute Ripple example of some of the kinds of things you could find in that showcase. It's about 2.5 minutes.
Ripple, the global real-time settlement network. Consumers and businesses have new and increasing demands for cross-border payments. Ripple connects banks around the world and allows them to offer real-time cross-border payment services to their customers. Currently, cross-border transactions require many intermediaries to execute, so settlement takes multiple days. This often creates costs and risks that make it difficult to meet today's market demands. Ripple enables cross-border payments to execute directly between banks within seconds and provides the banks end-to-end visibility throughout the whole process. Ripple is infrastructure technology banks can adopt to power new payment services like low-value retail and corporate payments. Let's see Ripple in action, enabling a person-to-person remittance use case. On the right-hand side, you see a bank's mobile app. On the left-hand side, you see Ripple powering the core processes to execute a cross-border payment. Alice, a bank customer in the US, logs into her mobile banking app. Her bank uses Ripple for cross-border payments. She wants to send money to Bob, who lives in Singapore. Bob's bank also uses Ripple. When Alice selects Bob as the recipient, Ripple allows her bank and Bob's bank to exchange sender and recipient information to meet risk and compliance requirements. This information is encrypted and exchanged directly between banks via HTTPS. No customer information ever touches the Ripple network. Alice wants to send $1,000 to Bob. Ripple queries the banks for their fees and the network for a real-time FX quote. Ripple packages this information to show Alice the total cost of her payment to Bob in Singapore. Thanks to Ripple, banks can provide customers an accurate total cost, delivery time, and delivery amount for cross-border payments, down to the cent, before the payment executes. After Alice approves the payment, settlement takes place over Ripple in 5 to 10 seconds. Simultaneously, Ripple triggers Alice's bank and Bob's bank to update their ledgers. As soon as the funds are posted into Bob's account, Alice is notified. Ripple solutions afford banks access to transact directly, speed transaction settlement to real time, trace funds end-to-end with certainty of delivery, and minimize the total cost of every transaction. With Ripple, banks around the world are already developing new payment products and services for real-time cross-border transactions. To learn more, please contact us at ripple.com.
Example of the kind of information you could find at fedimprovements.org YouTube site. And Ripple, by the way, is one of those organizations that uses that distributed ledger, and they have their own virtual currency, which, by the way, is not really part of their particular business model, but that just gives you an idea of the kinds of information you could potentially find. So just very quickly, we're hoping that by early 2017, we will have published a white paper that says, hey, we got these 20 plus proposals, 3 of them meet all of those extensive criteria that we talked about. Here's what we're thinking the private sector is planning as next steps, that sort of thing. So look for that, and if you're interested in staying up to date, you can sign up at our fedpaymentsimprovement.org website and you'll get alerts for information. A few other things going on, faster payments. NACHA is implementing same-day ACH later this year. It's initially limited to credit payments only that are $25,000 and under, but it's an example. I'm also, staff and I are working on, the W3C is the World Wide Web Consortium. They set standards for the World Wide Web. They recently set up a new technical group that's looking at web payment standards, so you can build payments right into the web infrastructure. They've issued, their very preliminary standard for programmers. So again, that's another way where we'll probably see faster payments. The Clearinghouse is a consortium of the largest banks in the US. They're in the process of building a real-time payment system that, likely many banks would connect to, that is initially going to be for person-to-person payments. So there are lots of things going on, is my point. Quickly, we also have the Secure Payments Task Force that are working on a variety of capabilities. Payment identity management is one of the most important parts of managing the security of a payment. If you use a card, we want to know that that's a legitimate card and that you are the person and the only person who should be using that card. And has a lot, if you buy something on a website, the merchant wants to know that it's you, and whatever payment you want to use to execute the transaction, you legitimately have a right to use that payment. So that's all related to payment identity management. We talked earlier about data protection. That's critical, especially with the kinds of sophisticated cyber hacks and so on that we're all subject to. This just gives you a sense of the kinds of issues that we have in this country in terms of fraudulent payments. Fortunately, as a percentage, here's the transaction value of all of the payments that was surveyed, and here's the actual fraud value. So it's a small number.
Hi, I'm Steve Kirsch, the CEO of Token. I'm delighted to share a story with you today. First,
No, we don't want to hear his story. No. Goodbye. All right. So there are lots of costs of fraud. You may experience the cost, like my husband. Poor guy, he's an attorney. He goes to his bank, who will remain nameless. Every couple of weeks, he gets a few $100s for his mad money. So he goes to a gas station. You have to pay for gas. He whips out a $100 bill, and it rips a little bit. And I got to give credit to the cashier. The cashier goes, "That's a fraud. That's a fake." And so he takes my husband's $100 bill. My husband says, "Oh, give that back to me." 'Cause he has a pencil. "No, give that back to me. I'll pay you with my card." "Oh, no, this is evidence. And you have to stay. I'm calling the police." So, true story. My husband has to stay. He loses his $100, which was a counterfeit. Now he's worried that his other 4 $100 bills might be counterfeit. He goes back to the bank to try to get, an exchange. They say, "Oh, we got those from the Federal Reserve." Yeah. And no, I'm sure you didn't get those from the Federal Reserve. But yeah, so then he still had to pay for his gas. So this is another cost of fraud. Public humiliation. And the consumer who inadvertently gets this from their bank ends up paying for his gas anyway. All right, you've all experienced the chip card, right? So that's an example of an effort to improve the safety of the payment system. But keep in mind, this is only a protection as it relates to counterfeit cards in person. Yes, sir.
I was recently in Montreal.
Yes.
And on up there with the chip system, you have to use the PIN
Correct.
every time.
Canada is chip PIN.
Are we going to because to me, that seems a very key component of the security aspect. Are we eventually going to transition towards that direction? Comments?
My guess is we will. I totally agree with you. All of the data shows that if you have both the chip and the PIN, what the PIN does is it demonstrates that you should be the one using that card. And so it reduces lost and stolen and other kinds of fraud. So you're absolutely right. There are reasons in this country, mostly what I hear as legitimate is there are lots of merchants, because we are so used to a non-PIN system, that don't have the equipment at the cash register to allow you to input a PIN. So I think what will happen is we'll roll the chip out. And over the next few years, we'll move to PIN. Correct. All right. So that is really where we're ending the presentation. And it is 8 o'clock. I am so good on time. 8 o'clock. Now, we have snacks. And they're hot. And apparently they're delicious. So I will be here. I believe, Carmi, they're right outside, right?
Right out in the lobby. Mhm.
Yeah, so if people have additional questions, we can enjoy some snacks and chat about the questions. Yes, sir.
Great talk, by the way. I enjoyed it.
Thank you.
Thank you. So one of the reasons I came here was because I find the future of payment systems really fascinating. I'm a web developer and Bitcoin programmer
Excellent.
for my job, and so I see the importance of where the payment system is going. My question for you is, how closely is the Fed looking at the crypto technologies, the evolution of blockchain technologies? How closely are you looking at that?
Yeah, so I think there are two distinct things to look at. There's the application, and I consider Bitcoin to be an application, and there's the underlying technology, the distributed ledger, the smart contracts, the aspects that you could have lots of different applications with this underlying technology. And we're looking at both. So I would say, this is just my personal opinion, I think the underlying technology holds a lot of promise for a lot of innovations. Here's an example. Imagine that you own a car and you don't own it outright. You bought it with a monthly payment. And so you go to the gas station and your car is associated with a blockchain that includes the proof of your purchase in the blockchain, and that includes your monthly payments. So you then, if you're current with your payments, through your cell phone app, your car turns on. But if you're not current with your payments, you can't turn on your car. That kind of technology could enable all of what I just said, because you can maintain that record of information that's then actionable in terms of contractual relationship that you have with the car dealer. I think that's really powerful. Whether things like digital currency as such continue in sort of the Bitcoin mode, I think I just don't know. But we're clearly watching that too, because here's your point about cost. I think in a centralized model where you would have a central ledger with, a central bank, the UK, issues their cryptocurrency, that would be really low cost, because you have the benefit of scale. You don't have, computers all around the world with Bitcoin miners and the computing cost of that. You have the benefit of scale, and you take out the cost of physical currency, like I was talking about with the physical check. You don't have those trucks running around. You build really good security into that method, and you issue those cryptocurrencies through the banking system just like you issue physical currency today. Something like that, who knows? So the other thing that's going on that's maybe even more important than the Fed and others is within the standards community, and standards typically follows innovation, right? So within the standards community, there's an organization called the International Standards Organization, and they have a technical committee that develops financial services standards. And I made a presentation to them at the end of April on this topic. And they were looking at the following question. Do we need to revise the standard associated with assigning currency codes, like USD as a currency code, EUR as a currency code? Do we need to modify this standard in order to adapt to these digital currencies? Well, we ended up recommending no, because to the point made earlier about what is currency, that currency code standard is really associated with fiat currency. That was what it was written for. So what we recommended is we should create some other kind of second-tier registry So we would have an official source of codes for these digital currencies. But we should also study the range of standards that we need in financial services for this underlying technology. What kind of security standard do we need for digital currencies? And so a group was set up to begin to work on that. So there's a lot going on, not just within sort of the central bank world, but the broader industry recognizing the power of these changes. Yes, sir.
Are you also looking at standards with the remittance information that goes along with the payment?
Yes.
Not just the payment to payment?
Yes. So now when I talk about remittance, I'm talking, my worldview where I do work is mostly in business to business versus international. Having said that, my staff does a lot of work because that's a huge pain point for businesses, and for that matter with international payments as well. I can't reconcile and close my account if I don't have the information about, if I just get a payment without knowing what account it's associated with in my business, I can't conclude that transaction. So we work with an organization called X9. Sounds sort of like, ooh. Anyway, it's an ANSI accredited standards body for financial services in the United States. And one of my staff here chairs the group that looks at what I would call bank to business and business to business standards. And we're working on exactly those issues. Yes.
Hi, I was just going to make a quick comment and would look for you to comment back. It seems that by speeding up the payment system, in the beginning of your presentation, you talked about people in the payment process end to end, where 1/3 are ballpark people, 1/3 are never check their account people, and 1/3 are down to the penny people. Well, it seems the speeding up the payment process, isn't that putting those 2/3 that don't check their accounts all the time, or that maybe never check their accounts, aren't they putting those people more at risk?
Yeah, so I think, again, this is Claudia Swendseid speaking, I think we cannot rely on human beings to do the right thing, even in terms of protecting their own self-interest, as you just pointed out, based on my illustration. So I think we have to build it into the payment system itself and into the technology itself. So rather than relying on me checking things off, somehow I need in the future to create a more bulletproof security system so that I don't have to rely on good behavior. Because typically in our payment system today, the vulnerabilities are at the end of the payment system. So for example, as a bank, I might have really strong security, but if you do online banking with me and you let your computer become infested with malware and other, awful things, and you don't use commercially available protections, as a bank, I can't really stop you or prevent you from doing that, and yet I can't deny you necessarily access to my services. So we have to figure out a way to build security into the fabric of the payment system so we don't have to rely on everybody doing the right thing. What those solutions are, I think there are lots of technology options. There are costs to those kinds of things, but that's what we need to sort through. Oh, question here?
Back to Ripple. Is it only done internationally, transactions internationally, not within a country?
Ripple could be used within a country as well as cross-border. Their current business model, what they are currently focused on selling, is a cross-border settlement solution. But the technology could be used, domestically as well. But that's what they believe they have a value proposition to offer, and that's why they're focused on international clearing. Anything else? Yes, sir.
This might be a good one to end on. I'm not like a crazy Ron Paul person or anything, but I am curious of the criticism about the lack of there ever being an audit of any Federal Reserve.
Oh.
How do you respond? Is that even true, or how do you guys respond to that?
Yeah, okay. I guess it depends on what one means by audit, all right? I have worked at the Federal Reserve for 31 years. This organization is audited. We have external auditors. We have internal auditors. I mean, the amount of due diligence, we have cameras, you know. If I work in the cash department and try to go to the bathroom, I mean, I don't have any privacy. So I think it depends on what you mean by an audit. Where the Federal Reserve has tended to be very sensitive is related to monetary policy, right? Not the payments businesses that we're in. And we're very sensitive about ensuring that that is very independent and is not compromised by a political process. In other words, if I need to be elected every 2 years, right, I need to do certain things to make voters happy. And so I'm subject to a political process that often doesn't allow maybe the most independent decisions. That tends to be the place where audit the Fed means different things. What do you want to audit? In most cases, bring it on. Open book, feel free. But there are certain things like monetary policy where in order to ensure a robust debate, you know, maybe we want a couple of days before we hand over information. I think it really is a fairly narrow set of areas where we've been sensitive. Again, ultimately that's a congressional decision, not ours. So if Congress says, we want you to be subject to X more audits, that's their decision to make, and we will do, you know, what makes the most sense.
So do you think then that kind of line, thank you, that kind of line of argument is more of a political or an ideological thing than something that's practical?
Oh yeah, I mean, it's like, you know, there are still people who believe we should be on the gold standard. Fine. You know, and is it because there are good sound economic principles for that? That's probably arguable, but that doesn't mean, you know, a rational person can't think that that makes sense. So you can have lots of debates about, you know, fundamental differences in a civilized way, and I might come out on one side and somebody else, you know, whether it's ideological or they may feel, I mean, okay, I will tell you this, even though it has nothing to do with what I'm talking about. I was talking to a person who I consider very rational and good friend the other day, who's a supporter of Bernie Sanders. Great, bring it on. My view is be active. He is utterly convinced that there is a conspiracy between Donald Trump and Hillary Clinton, where the reason Donald Trump is running for president is to get Hillary Clinton elected. Yeah, see, you laugh. Now, okay, I hope I haven't offended anybody in this room, but I'm like, really? So I only give that as an illustration. People feel strongly about things, and they believe that they have facts on their side. And I can listen to that and go, what? So the same thing happens even in a seemingly completely rational place like the Federal Reserve. All right, snacks, yes.
One more question about the
Sure.
A lot of people in this, thank you. A lot of people in the cryptocurrency space are concerned right now about possible regulation coming from
Absolutely
the
they
government
are.
to stifle the innovation of the technology.
Absolutely.
My question to you, in your travels, have you noticed or been aware of any perhaps future regulations coming down the road?
Yeah, so the state that is most out front with regulations is New York. They have that bit license that they put in place. California is probably next. So the regulation seems to be emerging first at the state level, which probably makes sense because you can experiment and try some things and see what happens and see what works. Congress seems to be pretty reluctant. You know, they've had a few hearings, but I think what you mainly hear is we want to understand, but it's probably too early. So at least what I have observed is more at the state level. The other thing that I've heard, though, and this is from companies that are sort of Bitcoin companies, they often want clarity on regulations, right? Because their issue is, I don't want to create a business model and start doing all of these things, and then some regulation comes along. I want to know now what you're thinking. The other problem that occurs is, let's say you're a bank and part of your business is to invest in Silicon Valley startups. Well, you want to know what the regulations are going to be so you know whether or not you can make these kinds of loans and not get into trouble. So there's also sort of a demand on the other side for let us know where the regulations are coming out so we can build that into our thinking. But yeah, where I've seen activity has been at the state level. All right, excellent group.